Chakri Lokapriya, Managing Director at TCG Asset Management, joins us on the show. Good morning, Chakri. Let's start with the basic one, and everyone's talking about the entire issue with the PSU banking space. How concerned are you? Would you recommend staying away from this because you never know what skeletons will come out next? Is it a good time to shift to private banks, or is banks an avoid totally?
Good morning. Frauds do happen once in a while. And yes, PSU banks have slightly more archaic systems, technology systems, and therefore not picking up things as they should. But this itself, will lead to a short-term slowdown among the PSU banks. Even their ability to lend will, because they'll become more cautious before they approve any loan. And on the other hand, the private banks will continue doing what they're doing. And mind you, largely private banks are retail lenders, they're not corporate lenders. So the main corporate lenders are a few of them, like ICICI, Axis, maybe IndusInd Bank. And these are robust banks in terms of their systems and processes. They will take some market share away from PSUs again, like it happened like a couple of years ago. And therefore I think we will see a shift towards private banks.
Chakri, good morning. This whole argument about PSUs giving competition to private banks and NBFCs by virtue of this recapitalization and becoming healthy is now out of the window. So one, private banks will do what they continue to doing. What about NBFCs in the wake of the rising yields and rising cost pressures, but the feared competition from PSUs not looking like impact them in 2018 at least? What do you do here?
You're right in terms of NBFCs. Again, we'll go back to rewind back about a year and a half years ago, where they were taking some amount of market share. And second, rising costs is a concern for, generally in terms of NBFC's rate of growth, which will kind of slow down. So they won't grow as fast as they did 2 years ago. And in terms of PSU bank lending, yes, will come down, but PSU bank lending and NBFCs, they lend to slightly different things. The big ticket corporate loans are always made by the PSU banks. So NBFC is not going to take any kind of market share in that space. It's more the smaller ticket SME type of loans and the consumer type of loans, consumer durable auto loans, etc., etc. That's the space where NBFCs will continue to take market share.
What about industrials? I was reading a couple of reports, and if you see the third quarter numbers, some of them came out with decent numbers. L&T came out with a strong set of numbers in the construction space. Do you think that there are green shoots that are being visible? Would you like this space from going ahead?
Industrials, are in a fortunate place given the government's policy thrust of irrigation as well as infrastructure. And given that this is an election year, we're going into elections next year, so there'll be a huge amount of push into that space and building roads and doing irrigation projects. And the number one beneficiaries are EPC companies, L&Ts, the Nagarjunas, the PNC infrastructure, companies like that. And mind you, their valuations are not really stretched. So from that perspective, there is a valuation support. In the most recent quarter, the order book has accelerated very well. Okay. And so I think they're looking good.
What are you doing in your fund? Which are the pockets there you're seeing, activity pick up? Which are the sectors that you're accumulating in your fund?
One is infrastructure. All these names we are adding. And second, we're also looking at irrigation as a space, another pet government theme of focus on farmer and agriculture. So the entire irrigation space, JN Irrigation, Kisan Molding, Finolex, that whole space will continue to do well, or rather we'll see an acceleration of earnings growth in that space. And in each one of these companies, there's also a company-specific catalyst, either reducing debt or expanding into a newer state for providing irrigation, EPC, etc. So a confluence of both will help these companies to do well.
Interesting. What about the other allied pockets? One, since you mentioned Finolex, I was reading a note post the Astral numbers and about the kind of work that all the pipe makers are doing, and how for Astral the adhesives business seems to be doing well. I think the stock is up and about in today's session. Do you look at this one?
Finolex, I haven't looked at it lately, but Astral, yes. And Astral, they'll benefit. It's a combination of both policy push, which they benefit from. So one is irrigation. The second is also housing. because mass housing, urban housing, everything requires pipes, fittings, fixtures. So they benefit from two big, large industry growths. And plus, you're seeing a huge amount of innovation in that space in terms of the building materials that go into the making of the pipe, which reduces their cost and increases the margin. And that will improve profit margins for this entire space over the next, let's say, couple of years.
Okay, two questions, Chakri. One is IT and the NASSCOM guidance notwithstanding. You would presume that some of the listed players will do much better than that 9% band as well. Maybe a couple of large players might have problems, but otherwise, by and large, the space might do better than the 7 to 9% band that NASSCOM has given for the industry. Are you seeing value still remaining in this space when the companies are seeing green shoots, because the stocks are no longer at the levels that they were prior to October 2017?
You're right, but one of the good things about IT as a sector is the certainty of earnings growth.
Sure.
And which is not going to be impacted by a kind of immediate knee-jerk reactions that we've seen post LTCG, the budget, the Indian politics, etc. Because it's dependent on US demand, which is very strong. Valuations are not demanding. Yes, they have come up, but still, they will grow in line with their earnings growth or better.
But
the
mid
stock
caps or
returns.
large caps in the IT space?
The mid caps actually have done fairly well over the last space. The valuations are still at a discount to the large caps, so they will continue to do well from a stock market perspective.
What about the real estate space? Most of the counters have actually more than doubled since demonetization. Is there more room for them to grow, or is just a real estate frenzy that's happening? Because on demand, on ground, there's nothing happening actually.
I think for real estate, one, they were coming off extremely low valuations. Second, in terms of now there is an urgency on the company's part to get rid of their inventories that they are sitting on. Huge unsold flats, huge unsold commercial real estate. Commercial real estate has seen a significant pickup, both in terms of volumes and prices. So residential is still soft. So from that perspective, companies like Prestige will do well. And Shobha is a strong balance sheet, has improved its balance sheet, sales are improving, and therefore pockets of strength will be there. And also this huge expectation that at some points REIT will happen in this country is also keeping the stocks up.
Chakri, is there a theme or a set of stocks existing wherein the valuations are not obscene and you see earnings growth CAGR for the next 3 or 4 years northwards of 15-20%? Is there a combination like that available currently?
I think so. In specific pockets like petrochemicals, chemicals. Now, chemicals is a very big space because chemicals are used both in agriculture, specialty chemicals are used in making, whether it's a consumer good, even we're talking about pipes. Lots of chemicals go into making of pipes. That space is good because for various reasons, companies in that space have good 40-50% of their revenue coming from exports. And exports markets are doing well. The US is doing well, the EU is doing well. Their raw material costs are kind of stabilized versus 3-4 years ago. And therefore, their earnings will grow north of, I think, 15% easily for the next 2 years.
Specialty chemical companies, right?
Companies like Aarti, Make Money Organics, Finotex, companies like that will grow clearly north of 20% earnings.
For the next 3-4 years. You can pencil in that in.
We can pencil that in. And in terms of the valuations are probably trading at 18-20 times.
Okay. Anything on metals? Because most of the counters have done well. Base metal prices only have gone up significantly. Do you like anything in the metal space?
In the metal space, continue to like Hindalco, the large ones. Because there you have a huge amount of both the export markets are very strong, and therefore the pricing, the domestic pricing in India is a reflection of that. And India, with a huge infrastructure kind of a thing, and coming off a low base, they are looking good. And I think companies like Vedanta and Hindalco will continue to do well.
Chakri, final question really. When we spoke, when the markets were in a bit of a tizzy recently, you mentioned that you are using opportunities like these to add on to India positions. I'm guessing the stance still exists?
Yes, the stance still exists, and actually I more tilted towards mid caps, versus the popular opinion that large caps are safer. yes, I can see that point of view, but I'm seeing a lot of value in mid caps, and because I think the large caps, the Nifty, will be a range bound for the rest of the year.
Two to tango maybe. We just spoke to Mark Mobius the other day, and he was saying that he believes that Indian small caps have a lot of room to grow as well. A lot of money managers seem to be betting that.
Yes, I was. He was my boss at one point in time.
Okay,
Yeah.
that too.
Yeah.
Great. Chakri, lovely having you today. Thank you so much for taking the time out and speaking with us, and look forward to having more often on this forum.
Thank you.
Thank you.